Executive Summary Company, VYNE Therapeutics. Clinical stage biopharma developing BET inhibitors. Inhibit platform for inflammatory, immune-mediated, and certain oncology conditions. Stage thesis. To lead programs. Topical Reprise, VYN201. In Phase 2, B vitiligo, and oral. VYN202BD, 2-selective BET inhibitor. Phase 1b signal in psoriasis. Value depends on clinical outcomes, licensing for Repibrizib, and financing or strategic transactions. Short summary. Minimal revenue royalties only. Heavy R&D spend. Extended cash runway into H1 2027 after cost cuts. Upside hinges on clinical success and partnership. Downside risk is high due to dilution or failed studies. One company overview and business model. Focus. Small molecule BET inhibitors delivered topically and orally for immune inflammatory and fibrotic diseases, plus selected cancers. Model R and D heavy. Milestone, license-driven. Value creation through clinical progress, partnerships, and potential royalties. To industry and market position therapeutic area. Immunoinflammation, dermatology, vitiligo, psoriasis, fibrotic, and oncology. Position. Early stage player with differentiated approach, BD2 selectivity, topical formulation. Patent life for Repibrizib extends into the 2040s. 3 revenue streams current. About $0.5 million in royalty revenue for FY 2024, $0.07 million in Q2 2025. Future potential milestone licensing payments. Royalties if programs are partnered and commercialized. For competitive advantages, differentiation. BD2 selective, oral compound and topical delivery approach with long patent life. Limits. No commercial infrastructure, very small scale. 5 scalability R&D model, scales only with additional capital. Commercial model, relies on external partners or acquisition. 6 financial statement analysis, income statement FY 2024 versus 2023. Revenue $0.5 million versus $0.4 million. R&D $30.95 million versus $16.31 million. Net loss $39.83 M versus $28.45 M. Balance sheet cash and equivalents $19.93 million at year-end 2024. $39.6 million as of mid-2025 after financing and cost cuts. Runway projected into H1 2027. Cash flow operating cash use FY 2024, $34 MQ2 2025 net loss reduced to $5.8 million from $9.4 million YoY due to cost reductions. 7 key valuation metrics: market cap, single-digit millions, with stock near 30 cents. PEE, EV, EBITDA, PS. Not meaningful due to negligible revenue and negative earnings. Practical valuation. Event-driven, based on pipeline probability-adjusted NPV and potential partnering. 8 growth potential and TAM indications. Vitiligo, psoriasis, immune fibrotic diseases, and oncology niches. Market size. Dermatology and immunology TAMs are multi-billion-dollar. Catalysts. Phase 2, B readouts. Partnering activity, early signals in psoriasis. 9 competitor landscape competes with other companies pursuing BET inhibitors and dermatology treatments. Larger dermatology players with existing commercial franchises are natural partners or acquirers. 10 Management and Governance CEO, David Demzalski. Track record. Executed asset divestitures, cost reductions, and fundraising. Governance. Typical small-cap structure, relying on equity raises and private placements. 11 risks clinical, Phase 2b vitiligo and Phase 1b psoriasis are higher-risk readouts. Partial FDA clinical hold on VYN202 for males toxicology issue adds risk. Financial, ongoing net losses, history of dilution, dependence on licensing to extend runway. Regulatory. Any adverse findings for BET inhibitors could halt progress. Market risk-off periods in biotech could limit financing or partnering interest. 12 dividends and shareholder returns, no dividends, no buybacks. Returns depend entirely on clinical partnership outcomes, or M&A. 13. Insider and institutional activity. Shares outstanding increased significantly due to financings. Pre-funded warrants and placements create dilution overhang. Institutional and insider positions are limited. 14. Technical analysis. Stock trades like a penny stock. Highly volatile, thin volume, erratic price swings. Support resistance unreliable. Catalysts dominate price action more than technicals. 15. Recent analyst ratings in news. Sparse analyst coverage, mostly small firms. Ratings mixed but generally speculative by hold. Recent news. Q2 2025 results showed reduced burn and smaller net loss. Rapid rise phase to be top line reported in mid-2025. VYNE 202. Phase 1b signaled activity in psoriasis, but remains partly on hold for male patients pending toxicology data. Active search for Rapibrazib partnership. 16. Red flags and watchlist. Financing limitations under SEC shelf rules until market cap exceeds $75 Warrant overhang and dilution potential. Detailed Phase 2b efficacy. Safety data pending. FDA toxicology requirements for VYNE 202. Partnering discussions outcome for Rapibrazib. 17. Bull case. Rapibrazib delivers meaningful efficacy and safety. Gives licensing deal with milestones. Royalties. VYNE 202 advances into larger trials. Attracts major pharma interest. Cash runway buys time. Bear case. Failed trials or safety issues. No partner interest. Cash depletion gives severe dilution or asset sale. Verdict. Suitable only for highly speculative biotech investors comfortable with binary risk and dilution. Not for conservative or income-focused investors. One-page cheat sheet. Ticker. VYNE stage. Clinical. Phase 2. B topical Rapidizid. Phase 1b oral. VYNE 202. Cash. $39.6 million mid-2025. Runway into H1 2027. Revenue. $0.5 million 2024. Net loss. $39.8 million 2024. Key catalysts. Rapibrazib Phase 2b detail. VYNE 202 toxicology and further clinical data. Partnering M&A risks. Dilution. Clinical failure. Regulatory holds.